Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka. What a day of sell-off it has been for the markets, and that too after opening above that 21,700 level. We've come down to levels of 21,200 or thereabouts. In fact, at one point in time, we had, even plummeted below that 21,200 mark. But we managed to shut shop above that level. Remember, last week we had seen, a similar fall. Where we clocked in the low point of the day at 21,285. We've managed to, dip below that level as well today. And if you look at the Sensex, that has slumped over 1,100 points today. Of course, the culprit, Nifty Bank, that has once again shaved off 1,000 points. And the big loser there, of course, HDFC Bank. Ever since it has reported its number, it hasn't really been able to, see any kind of reversal. It has been on a downward trajectory, and that has been weighing down not just on the Nifty Bank index but also the Nifty 50 index as well, the benchmark. One third of today's losses could also be attributed to HDFC Bank alone. Other bank stocks like IndusInd Bank also kind of hammered out of shape. That was the top Nifty loser today. 6% kind of a cut coming in on an IndusInd Bank, but ICICI Bank managed to hold the fort. In fact, ended higher by about almost 2% or thereabouts after earnings came in better than what the street was estimating, and also some bit of comfort coming in after HDFC Bank numbers came out. People, in fact market participants, were thinking that could be a systemic issue, but with ICICI Bank's numbers, that concern has really been put to rest. But nevertheless, banking index as a whole down about 2.2% today. Mid and small caps also hammered out of shape. Mid cap index down 3%. So broader markets were really bleeding in today's session. And if you look at the other pockets like Realty, that also took a sharp knock, 5% kind of a fall coming in there. Metals as a pocket also down and out. But Zee, of course, plummeted over 30%. Of course, the merger with Sony has been called off, and the stock has been reeling under pressure, with brokerages saying that, of course, valuations are likely to come down sharply. They have cut their target prices, and the stock, of course, as I mentioned, plummeted 30%, taking the media index down with it. 12% kind of a cut coming in on the Nifty Media Index. But what managed to hold out today was the Pharma pack, thanks to strong earnings from Cipla. Cipla was the top Nifty gainer today, up somewhere around, half a percent, almost 1% or thereabouts. And Dr. Reddy's, on the other hand, also, Cipla, I beg your pardon, was up 7% today, and it has managed to hold up other pharma names like Sun Pharma, Dr. Reddy's. Those were also some of the names that were on the gainers list on a day when there are few gainers. Cipla, Sun Pharma, Dr. Reddy's, so Apollo Hospital. These are some of the pharma names that managed to do well. Some of the auto names also, Bajaj Auto numbers coming out tomorrow held out. Hero Motocorp, up by about 1% or thereabouts. So some gainers were there, but they were few and far between. And the advanced decline ratio, if I must mention that, on the NSE it was 1:5. So every one stock gaining for every 5 stocks losing. Aside of that, rail stocks, PSU stocks, all of these stocks that have been on an upward trajectory saw some bit of profit taking today. But to make sense of what is really happening in the market, what to make of this kind of a fall, that too a second time in a matter of a week or so. Let me bring on board my guest for today. Joining me is Jay Patel, who's a research head at InvestMentor Securities. Great to have you this afternoon, Jay. What are you making of the fall? Because we've broken below that last week's low of 21,285. So where would you expect the next support level to emerge now?
So good afternoon, Nandita ma'am. So if we talk about Nifty, particularly Nifty has been seeing a strong beaten down, particularly led by banking stocks. And today, if we talk about a daily chart, we saw it breaching 34-day exponential moving average, and particularly I'm very sure about Nifty crossing at around 50-day moving average, which is placed at 21,075. So I'm eyeing for 150 points downturn within 1 or 2 days. So definitely we would be bearish on Nifty, and particularly Bank Nifty, which I'm eyeing for a fall around 400s. 44,600. I believe we can see the levels coming in 1 or 2 days. So Bank Nifty also turned bearish, particularly after crossing below its 100-day exponential moving average, which was the support since last 1 week. So particularly breaching this level was very downturn for Bank Nifty, and we can see it would touch around 200 exponential moving average, which is placed around 44,600. So I'm bearish on both of the indices, Nifty as well as Bank Nifty, but we can see a strong support finding from IT and Pharma. So definitely defensive sectors would play a critical role in defending these levels. So I'm particularly bullish to flat on Pharma as well as on IT, particularly in this kind of market.
Right. Talking about HDFC Bank in particular, Jay, would you advise investors to not try and catch a falling knife? Because ever since it started dropping after its numbers, it seems like traders or investors are a little hesitant to buy at lower levels. So how or what would you advise investors or traders to do with an HDFC Bank at the current juncture?
So if we talk about HDFC Bank, today's stock has breached below its 200 exponential moving average, and we can next support which we can find would be around 1340 levels. So even as an investor, I would wait for this level to kick in, and 1340 would be something I would start buying this stock on a SIP mode, or if we can say on a slowly and steadily, we can build up the position in HDFC Bank for the long term, because the stock is pretty much it's in the value zone, and particularly if we talk about its peers, ICICI Bank as well as Axis Bank, HDFC still shows a major gap in valuation side. So I would suggest investors can start buying this stock after it breaches below 1350 level. So definitely it would be a good positional bet as well as a long-term bet for in banking sector.
1350 levels. That's the advice coming in from Jay. But what about an ICICI Bank? Divergent moves coming in on a day when the Nifty Bank Index is struggling. ICICI has managed to hold out. Any particular level one should keep in mind on the higher side?
So ICICI Bank was particularly guarding today's Bank Nifty because it was the only stock which ended in green, particularly in Bank Nifty index. So I would suggest the stock is in very good up move. The results were fantastic. So I would see if the market if market rebounds, I can see this stock climbing above 1070 levels. Even today, the stock has been trading well, and in the gap up opening, we saw the levels crossing above its 1050 levels. So definitely there is some bit of opportunity in ICICI Bank. The stop loss and risk reward ratio is pretty much in the favor of bulls. So I would keep a stop loss at around 1010 levels, and the target can be 1070 level. There can be 6% up move coming in ICICI Bank again.
All right, 1070, a level to watch out for on ICICI Bank on the higher side. But let's also address the elephant in the room, really. Zee, that stock plummeted 30%. Merger has been called off, termination charges being sought, and we are staring at a long legal battle as well. 30% kind of a downtick come in, and even global brokerages have indicated that there could be valuation derating, so to say. So for a stock like Zee, how should one really approach it?
So there are two sides of this coin, because I believe the 19 million termination fee, that is an overhang on this stock, and particularly if we translate that into rupees, it would be around 750 crores. So I would say if we are bearish, definitely we can look for a downside target of around 135 to 143 zones. But however, if we are trying to invest for a long term, if we are eyeing for a long term, I would believe the support level is very good side, because the stock has plummeted. This kind of down move was seen in 2021, and thereafter the stock has risen mostly 40 to 50 points. So definitely there is a value buying coming in, but we need to wait for the proper price around 135 to 140 zone would be something I would start looking for this stock as a buying opportunity. Currently, the stock has fallen around 50% from its recent highs of 300. If we talk about in December as well, in January, we saw the stock touching around 300 zones, and particularly today we saw around 150 zone coming in. So 50% downward within 1 month. Also, we can see further downturn of 10%. Definitely, that would be a good buying opportunity for a long-term investors, and definitely this improvement in margins can be hovering for 1 or 2 quarters. But I believe the media stocks as a media sector, the sector is in very good bull run, and particularly with elections and budget coming in and good advertisement revenue coming in for this media sector, I would suggest Zee Entertainment to be one of the stock which can be benefited in current bull run.
All right, I think that's a contrarian kind of a view coming in on Z. But what would you make of the rally that we saw on shares of Cipla? It hit a fresh 52-week high today. Would Pharma merit a buy if markets correct further?
Definitely, Pharma would be one of the defensive sector, and Cipla one of the major companies in Pharma side. I would say the stock can be a good, particularly at around 1,350 zones. If we find any deep toward that level, the stock would be in very good buying zone. Particularly the results were fantastic, and we saw the stock in very bad market, the stock crossing above 1,400 and keeping this level intact at the closing, it's something remarkable. So I would suggest, if if you are a short-term trader, definitely we can start buying at this with a stop loss of around 1,400 or even 1,395 stop as a stop loss. We can keep a target of 1,450 for a very short period of time. But I would believe Cipla is for a long-term and positional bet would be something I would keep on Cipla. But the stock, if we talk about like 4 to 5 months horizon, I believe the stock can cross above 1,700, but due to market downturn, we need to be cautious, and we can definitely buy the stock on any day.
Buy on dips is a strategy that one must adopt when it comes to a Cipla. But another pocket that was fairly resilient in today's market was the IT pack, another one when it comes to defensives, right? But, if you look at the likes of Persistent, good numbers, stock held out today, in contrast from a Coforge that was in the red. But most of the names, even if they were in the red, the fall was fairly measured. Would you advise buying into IT stocks as well on dips? And if yes, should mid caps warrant a buy now?
So, if we talk about IT, I would suggest the stocks which has already came out of the result. It can be an opportunity to buy, because currently the market is reacting very badly to the results, and the small downturn in any result will result the stock plummeting by more than 5%. So I would suggest buying large cap space, particularly on Wipro, even TCS or Infosys, because the small mid cap companies, the mid cap index is pretty much violent in today's trade, and particularly it can go forward in a particular week. So I would suggest buying in large cap stocks on Wipro as well as on TCS.
All right, large cap stocks merit a buy, but looking at the railway stocks, they have been high flyers, needless to say that. But today they saw some double-digit cuts coming in. Good opportunity to buy into them now, because they have, of course, rallied quite a bit. Would you say risk reward is still favorable as we approach the vote on account?
So I would be a contrarian here, because RVNL, I believe the stock is currently trading well above its 90 exponential moving average, and I don't see any reason the stock can move above. So I would see any fall coming in by around 10 to 15% again in RVNL, particularly if we talk about the railway sector, because it is trading well above 90 exponential, which is at 260 level. So 260 level would be initial level where we can see a stock finding support. Same goes to IRFC. The stock is moving well above its very short-term moving averages, and I don't see any reason above that. So if we talk about a buying opportunity, I would suggest 146 to 140 zones for IRFC, and particularly if we see a little bit above railway sector, I would suggest IRCTC would be something which is preferred in this sector, because it hasn't performed well as compared to these all other companies, RVNL or RFC or Realty. So IRCTC would be something I can look as a value buying in railway stocks. But the levels would be pretty much around 919 for IRCTC, which is 21-day exponential moving average, and rest all other stocks are trading well above 9 days. So I would be a contrarian buyer in IRCTC stock with lower risk to reward ratio, but the safer bet.
About railway stocks, of course, IRCTC is the one that could warrant a look at the current juncture, as all the others have kind of rallied quite a bit. But talking about the Realty pack, hammered out of shape today, 5% kind of cut coming in on the Realty index. But looking at the prestige estates, down almost 12%. Overall Realty numbers weren't all that great, and of course we saw a 9% kind of a cut coming in there as well. So here, would you say time to stick to the likes of DLF, or would you say that okay, this is a good opportunity to look at some of these others that have corrected quite a bit today?
So if we talk about Nifty Realty, this index has already performed well, and the euphoria which has been carried out with all advanced bookings and all this stuff. So definitely Nifty Realty was bound to get corrected. And with this move, I would see the Nifty Realty stock to correct a bit more from 9815 levels to around 9797 levels for Nifty Realty stock. If you're looking for a safe buying in this sector, I would suggest Suntech Realty would be something which we can look, because the stock hasn't performed well and it is currently trading well below its peers. Also, the stock has been trading in an accumulation zone of around 440 to around 473. So Suntech Realty would be something which we can look for buying in current downturn scenario. Also, DLF, if we talk about DLF, the stock has pretty much rallied more as compared to other stocks. I would see the stock falling more from current levels. 724 would be something as I can keep as a first target for this stock to see, because currently the stock is trading as taking a support of 34-day exponential moving average, and furthermore 50-day moving average is on cards, and the previous resistance of around December 15th 2023. So I would suggest a deep buy on deep strategy on DLF, and if we are looking to buy at current valuation, we can see Suntech Realty as a good space and realty space.
All right, but what about the likes of an REC PFC? They have literally tripled if you look at the 1 year chart, right? But of course, for REC, numbers came out today, and along with the entire market, the stock was down 4%. But would you really, advise anybody to look at this particular stock? As I mentioned, it has literally tripled in a year's time.
So definitely, Nandita ma'am, results were good in REC, but I would wait for a while to see the impact, particularly on these stocks, because the euphoria has been phenomenal in particular renewable energies. And today, even we saw the euphoria carrying out in Borosil Renewables as well as on SW Solar. But I would wait for REC and PFC to correct a bit to around 400 zones, because I would be a little hesitant to buy at current valuation, or it has already performed well, and the 3x earnings is definitely a denting move. But I would wait for a downturn and then I would start buying these stocks. Currently, the budget news has already been discounted, I believe, in RAC and PFC stock, and we would see the stock to fall a bit from current levels. So 50-day moving average would be something I would look for a support and a buying opportunity.
Right, a couple of more questions really. Two-wheeler pack has been active, likes of Bajaj Auto, Hero Moto, they have also had a fairly good run if you look at the 1 year charts. For Bajaj Auto in particular, numbers will be coming out tomorrow. The stock is up over in excess of 90%. Ahead of earnings, any kind of positioning that you would advise investors or traders to look at?
So auto sector, I'm really bullish about two-wheeler space as well as even four-wheeler space, because if even we saw yesterday's day, so there were many new cars as well as many new two-wheeler vehicles that were out on the market because of that auspicious day, and particularly this weekend, which we can see in the monthly sales data. So even Bajaj Auto, they has taken a bit up from this fall, and today the stock has ended above its recent low. So definitely the stock has taken support at super trend line, and we can see Bajaj Auto to climb upwards towards 7,420 zones. Keep a bullish view on Bajaj Auto, but with a stop loss, because the current market is really smashing everything down. So even Bajaj Auto, as well as I'm bullish about Maruti on a four-wheeler space if we talk about, because the stock has already been taking support near its 200-day exponential moving average, and I don't see any fall coming further in this stock. So if we are looking for 1 or 2 months horizon, I would suggest 10,200 zones to come very swiftly in Maruti stock. So I'm bullish about Bajaj Auto and Maruti in coming days.
Right, bullish on Bajaj Auto and Maruti in the coming days. Also want to remind our viewers, we've seen 4 days of incessant FII sell-off and the figure is quite huge, and owing the kind of sell-off that we've seen today as well, we'll closely be watching out for that FII net sell figure today as well. But going forward, next couple of sessions, at least for this week, it's a holiday shortened week. We have an off on Friday as well. So for the rest of the sessions, how is the setup really looking like after today's sell-off? Do you think there'll be some bit of buying emerge at lower levels, or do you think on the charts, there's some major levels that still need to be clocked in?
So if we see FIIs long and short ratio, particularly the long ratio has fallen from 65% to 46% if you talk about on a Saturday's day. But after looking on today's day, I would see to this Wednesday, tomorrow's Bank Nifty, and the day after tomorrow's Nifty's expiry, we can see the pain going further in this index, particularly because the technical charts are looking very bearish, and I don't see any green shoots coming in Nifty as well as on Bank Nifty. But over the next few days, after when the market nears budget, I would see the green signal coming in, and we can see Nifty climbing upwards to 21,600 zones on next week, after the next week particularly, and Bank Nifty definitely would emerge around 46,000 zones. But this week would be very much volatile as well as on a bearish side. So I would advise, if anyone is taking a position in FNO space, kindly avoid this market 1 or 2 days, because the Nifty would be very volatile, particularly if we see the long and short ratio as well as the option data.
All right, brace for more volatility, that's the word. But as we step into the the big event next week, any recommendations that you would like to make for our viewers?
So if we see the next week events, I would see housing companies as well as solar renewables energy would be something on focus in this budget. Housing for all, the Prime Minister Modi's line, as well as if we talk about renewable, yesterday they have announced a good 1 crore household for solar energy, which was a success in Gujarat. So I would believe SW Solar would be something which the stock is already in a beaten down zone since past 3 years. And if we talk about this stock on a weekly chart, the stock has taken a good support at around 442 levels, and stock is continuously climbing upwards. So if someone has a positional view or for a 1 or 2 months view, we can definitely see SW Solar could be performing well, and we can see the levels upward above 580 to 590 zones. So also if we talk about this budget specific, so LIC Housing Finance would be something I would see on a card. Just a second. So LIC Housing Finance, we can see a dip further towards around 540 zones, but this dip would be a buying opportunity in the current space. Housing would be something really on focus on this budget, as well as on the next term for the BJP government. So I believe this stock can cross above 620 zones in coming weeks. So LIC Housing Finance would be something I would be bullish on. And also in the life insurance space, LIC as a stock would be something on focus, because the government recently has announced a lower premium for the elderly people. So definitely LIC with current valuation, I would say the stock can be a good buying opportunity after today's fall. Particularly, the stock has taken a support at super trend line zone. So if we talk about buying this stock, definitely 860 would be something I would look for buying in this stock, and the stop loss can be kept at around 834, and the next target can be kept at 950, which was the resistance level in the previous day. So LIC would be a buying opportunity at current level.
All right, SW Solar, LIC Housing Finance and LIC are the recommendations coming in from Jay as we head into the budget next week. With that, Jay, want to thank you for taking out time and joining in this afternoon and sharing your thoughts with us. Always a pleasure chatting with you.
Thank you so much.
Well, with that, we've come to the end of this edition of Closing Bell. Of course, it was a tough day for the markets, and we'll have to see how things pan out tomorrow. Given the fact that FI sell-off or FI sell figure is expected to be a hefty one today as well. So the markets will be watching out for that figure very closely. And as Jay was mentioning, it looks like it is going to be a pretty volatile week for both the Nifty as well as the Nifty Bank index going forward. But with that, it's a goodbye from me. Thanks a lot for tuning in. Of course, you stay tuned to Money Control for all your other news and updates.